I'm going to go ahead and get this thing started. So today we are talking about final steps in the multifamily acquisition process. Before I get into that, I'd like to give a shout out to the conference we have coming up in June. It'll be a 3-day in-person event. Typically we do these webinars, but once a year, we're making an effort to get everyone together in Charlotte. So if you can go to multifamilyinvestornation.com, you'll be able to see that page. And we're actually giving $100 off. So if you look in the webinar chat box, you'll see a discount code. It's webinar, my initials, CN100. So that will only be active during this recording or during this live session. But you'll see our celebrity guests. You might know some of these guys. If you don't, you can actually click on their name and it'll give a nice description. But some high net worth individuals right here within the multifamily space. So a lot to learn from them. And then as well as a lot of speakers you may have heard of, maybe not, but some familiar faces, a lot of the team members as well from passiveinvesting.com. Okay. Also wanted to, if you don't know about me, please check out our website. You can meet our team and there'll be a little bit more of a description about myself and the team itself. So don't hesitate to do that. I think there's information, our LinkedIn's are actually attached here as well. So feel free to do that. And also we always have current offerings. So deals that are actually open. So right now we have Stepping Stone and Bridgewater, the banks of Bridgewater, Big Storage 2, and the Real Estate Debt Fund, which is always open. So check those out if you have any interest, but let's get into the webinar. So like I said, talking about acquisitions process. Last time I did a webinar, I talked about the process of sourcing deals to getting it under contract. Today, we're going to be talking about once you get in a verbally accepted LOI or offer, that's when the work really begins, right? There's a lot of upfront to get a deal under contract, but once it's under contract, that's when you really need to start performing. So we're going to talk about the order of operations from an accepted LOI to closing. What are all the final steps in the process and which are the most crucial? What other parties are involved in the final steps? And of course, I'll touch upon other things as well. And anything you guys would like to ask, please, again, don't hesitate to jot down in the chat box or the question and answer is a little bit better. So order of operations. So you submit an LOI typically to a broker. The broker represents the seller in a multifamily transaction. So there'll be probably a couple of rounds of submissions of LOI bidding. Typically, we submit maybe 3 versions of an LOI for the same property. Maybe less than that, maybe more, just depends. But typically you'll get a verbal award of the deal. So the broker will call you and the team up and say, hey, the seller wants to give you an opportunity. They like your terms. And from there, typically the seller's party typically doesn't sign the LOI. Sometimes they will. An LOI usually isn't redlined, meaning going back and forth from an attorney to an attorney. That process actually takes place in the PSA negotiations, which is the purchase and sale. So you go from an LOI, which is usually a 1 or 2 page sheet, over to a purchase and sale agreement, which could be upwards of 100 pages. This is where both parties, so the seller and the buyers, lawyers, attorneys, teams will get involved. And that negotiation process could be anywhere from a week, 2 weeks. Sometimes it could be even dragged out longer than that. No one likes that. But, if it's a seller that you've transacted with in the past, you'll have a contract that has already been agreed upon for both parties. So you can use that as a good starting point. But if this is your first one with a new seller and you're a new buyer to them, typically we like to send out our first draft of the PSA just because it has our verbiage. It has the things that we'd want. But sometimes the seller will dig their heels in the ground, say, this is our version, let's start here. So we like to give a red line version of the PSA every 24 hours. So if it's given to us, we'll talk with our lawyer team and try to give back a red line version, right? An edited version within 24 hours every single time. That's not always the case, but that's what we're aiming for. This is where you'll agree upon warranties, let's see, it really depends on the deal as well. It could be time frame as well. Usually your time frames, meaning your due diligence period, your closing time frame, that's usually agreed upon in the LOI. But a lot of the more detailed things are in the PSA. So that's usually the first order of operations. Once that's signed up, or actually during that time, you are discussing on-site due diligence. So usually your majority of your communication is with the brokerage firm. They're the intermediary between the seller and the buyer. But in all multifamily cases, they're representing the seller, but you're always communicating through them. So when you're turning purchase and sale agreements, when you're deciding when you want to do on-site due diligence, when you want to do this, that, you're always discussing that with the broker. It's never directly to the seller unless everyone is in that conversation, whatever it may be. So at this point, while we're that week time frame, we're negotiating the purchase and sale agreement. We are discussing with the broker when we should do on-site due diligence, when our team can go on-site and look at every unit and all that, and notifying the residents that, we're actually going to be coming into the units and checking everything out. So that's usually a 3-day period. That's one of the steps that's very important. Let's see, the next thing at this time, the next bullet point here we have, or what other parties are involved in the final steps. It's actually really collaborative time frame. So you have your attorneys, you're talking to the brokers that are the intermediaries. The seller has their attorneys, which are constantly in communication with our attorneys. At this point, you're talking to either a debt broker or local banks. You typically have a soft quote at this point. Hopefully you vetted what kind of debt you're going to be putting on the property. But you should be keeping them informed that, okay, we verbally got awarded this deal. We're going to be moving forward. And they'll, at this point, start creating a package for you and sending that out to lenders. And doing that earlier, the better, especially right now, because debt is obviously the hardest piece of the puzzle right now. So the sooner you get the ball rolling on that, or your debt broker, the better. And typically during this process, fortunately, we have a team of, let's call it 6 acquisition folks who are involved, and defining each one of our lanes is very crucial in this. So obviously, our capital markets gentleman is working with the debt brokers, is talking to the local banks, is preparing. Usually he's in contact with the lawyers very closely to make sure someone's ordering all of the PCAs or all of the surveys, everything you need in order to get a lender on the property. I'm really getting into the weeds here. So if it's confusing, please don't hesitate to ask any questions. But this is a time frame of 60 to 120 days, depending on what you agree. There's a lot that goes into it, especially on a side, a multifamily property of 40 to 350 units. So just keep that in mind. A lot of these steps aren't always taken in the specific order. Sometimes your purchase and sale agreement will take much longer than you anticipate. Sometimes the lender gives us the wrong quote, whatever it may be. Nothing really goes to plan as you plan it in your head, but at least you can have some sort of order of operations. Oops, I think I just might have got rid of that, but okay, getting off track here a little bit, apologies. So the next step, you have the signed PSA, you have a set time to go on site for the due diligence, you're talking with the lawyers, you're communicating with the debt brokers that are trying to get you a loan. You should also simultaneously, you should be talking to your insurance broker. Typically you have that relationship already, there's already a foundation there. He or she may have already given you, they should have already given you a soft quote, just like debt, of the expense for insurance. Your three biggest expenses are your property taxes, well, your debt service, your property taxes, your insurance expense, and payroll. So having those predetermined before you put a deal under contract is pretty important. But at this point, you're talking with your insurance broker, and he's aware that you got the deal awarded, and he's asking all the materials that he needs in order to go out to the market and get you the best insurance policy. So that's a whole nother ball game. Typically, you're not going out to insurance carriers, but he is for you, especially on larger deals, such. I guess what's next is in the purchase and sale agreement that's actually in the contract is something called seller deliveries. This is everything that is required from the seller to deliver to the buyer. It's basically like an audit on the property, documentation, financials, whatever you want to call it. So they usually have anywhere from the signing of the PSA, this is agreed upon in the purchase and sale agreement. They have anywhere from 3 to 5 days to supply that information to you, and to have a list broken out to keep track of what they're actually delivering. So for example, that's your real estate taxes, payroll, your salary of the payrolls, your lease audits, all of the leases. Let's see, any contracts they have in place, whether it's cable, pest, whatever it may be, we need to see all of that. So keeping track of what the seller has delivered and what they have not, which is almost more important, is one of the immediate steps taken place by our team. We're auditing all of that paperwork. So we have the PSA signed, we have all the documentation, we have the lawyers involved, we have the insurance broker involved, we have the debt broker involved. This is all happening relatively within the first week or two of signing the PSA, of the potential up to 60 days that we have, right? So you need to be prepared. This is, like I said, this is where the real work begins. You need to have some sort of foundation of processes in place. So when you do get awarded, you can get to work. So let's see, what else I'm really focusing on the tab here, what other parties are involved in the final steps. I think I've named all of them. Eventually throughout the process, the insurance broker will match you up with an insurance lender. That's another party that's involved. Once they start getting into the game, they'll ask for new documentation. Another person is obviously your debt provider, so your lender. So the debt broker goes out to the market, finally finds you debt, whether it's agency, whether it's bridge, whether it's private life companies, whatever it may be. That's just another party involved, and they're going to continue to ask questions. So the more prepared, the more organized you are, the better, because your team is connecting the property with all the people that need things to get done. Another thing, early step in this whole thing is actually your investors, right? How do you get a final underwriting over to your investors? What does that look like? That process, that's pretty crucial in the acquisition process for the team that I work for. So what that looks like is, you have an underwriting, you have a pro forma and all that. And you need to translate that into marketing materials, essentially. So we have this structure that we've built out where we pull the same numbers every time to keep it consistent, and a process for that entire procedure, if you want to call it that. So once we finalize the underwriting, everyone on the team has confirmed that we will go ahead and extract that data and actually give that over to the marketing team. So they're also involved in all of this, right? And once that's confirmed, we'll actually have an internal meeting with the investment relations team to show them what the final numbers look like, why they are, talk about the location, all of that. That is very important because we are raising capital in order to close on this deal. So that's part of our job as well, is connecting that piece. There's definitely a transition of, okay, we got the deal under contract, but how do we translate that into investors? How do we get the debt? How do we get all of these things working together in order to close the deal? Sorry, I'm just rambling on here. It might be a lot, it might be fire hosing. So apologies. I might just take a second, look at the question and answers, and I can continue in a second here. Is there an underwriting tool that you use? One of the questions that came in from Mark Cox, is there an underwriting tool that you use that can be recommended? Well, our underwriting takes place in Excel. I think that's a great starting point because it's free, it's easy to access. There's online underwriting models that you can download and use, even if they're simple or complex. It's a good starting point. There are other softwares that I've talked about in the past that we use that are a little bit more institutional. So you get to a size of, looking at properties that are 150 units and above. We use a software called Red IQ that basically cleans up financial statements and puts it into our model to keep it simple. I hope that answers your question. Are there any slides that I'm using to present? No, there are not. I am just going off the top of my head. This is stuff that I do day to day. I have been doing this for, I don't know, a couple of years now. That's why it might seem a little unorganized, but no, this is off the top of my head. So sorry. Answer those questions. All right. Actually, another one just came in. Well, great. Thanks. Welcome. Let's see what's next. So at this point, you have most of the parties involved, which I would think is very crucial. Probably one of the most difficult parts in this whole thing is just communication, making sure everyone is aware of what's happening real time. The lawyers need to know what's happening. If debt changes, how does that affect our underwriting? How is that going to affect what we present to our investors? All of this is happening in time doesn't stop. So you need to constantly, it's a breathing animal, if you want to call it that. So actually something that recently we've done to help improve this process is hire someone to represent us as a transaction coordinator, which is going to help us quite a bit. So their main focus is actually going to focus all of their efforts on creating these processes to be more accurate and work on file documentation and work on communication, because it is a full-time job. Not only for multiple deals, but just for one deal. This is very time consuming, and it's really important to be super accurate. Okay, so I think we talked about all the parties involved. We've only talked about a week of this entire due diligence timeframe. So usually when I'll talk about what we do on site, we actually hire a third-party management team that comes in and will manage the property, and they're very heavily involved. Haven't talked about that, so I'll talk about that right now. So we'll let them know that we've been awarded a deal. They will schedule with us. We'll schedule it for them, but say, okay, we need to get you on site at the property to do due diligence, meaning go through every single unit, do a lease file audit, meaning check all of the leases, make sure they're being charged the right amount, make sure everything lines up on the information that was provided to us up front. And something like that typically takes, a lease file audit could take a week, depending on the size, it could be 2 days. As well as on-site, that's usually 3 days. And we have multiple teams of walkers that will go into each unit. And usually myself or someone part of the PassiveInvesting.com team will be there with them to make sure we're understanding. We're there with them to be doing this process so we know what's going on. So after that, we'll be raising capital in the background, right? So we'll be collecting funds for that. And then one of the things that we really work on for the acquisition team is finalizing the debt. So the debt broker will usually go out to a magnitude of lenders. They'll package them up and they'll basically have that compete for the piece. They want to place debt on properties, and they'll try to go out and get the best terms for us. Typically, term sheets will come in anywhere from 3 weeks to a month and a half after we've put the deal under. Let's call it about a month. So 30 days after, we'll have some term sheets, which then we'll have to decide. We can negotiate that. And once that whole process is started, then they ask, it's basically a whole nother due diligence, right? That lender will ask for all of the documentation that we just went through. They'll ask us this question and this question, and that whole process can take some time, especially on these larger deals. If they're giving you $50 million, they're going to want to do their due diligence, right? So typically at the back end of the due diligence timeframe or the closing period timeframe, you're working on a lot of the debt piece of this whole thing and the insurance and all that. So a lot of the upfront due diligence that we do has hopefully already been completed. Some things will be an ongoing process, but a lot of the back end stuff will be finishing up the debt and etc. I'm running out of breath here. I'm going to take a sip of water. Excuse me. So I see another question came in. Can you type the name of the underwriting software that you just mentioned? Yes, I can. It's RedIQ, Excel, CoStar is another software we use. I put that in the webinar chat, Devin. I hope that answered your question. Let's see. What have I missed? So we have a signed contract. We have signed debt. Hopefully we have an insurance policy at this point. Usually that falls into the remaining 2 weeks of the whole process. That will come into play. We've raised all the capital. At this point, you're basically solving whatever issues are left. So whatever that may be for that property, there's no property that doesn't have issues. There's always something that needs some attention. So a lot of the back end of the due diligence closing period focus will be on that. And I can get into that, but probably maybe we do another webinar of things that don't go right. Let's see. What have I missed? Is there anything that you guys, please feel free to write your questions in now. Devin, I will type the answer in here. So it's RedIQ, Excel, CoStar. Any questions you may have? I may stop there. I may have missed some things that you were hoping that you thought I was going to cover, but if that's the case, please write it in the chat box. If you want me to touch upon something more, I'd be happy to discuss through it if I know about it, of course. Doesn't look like it. All right. I think the last thing I'm going to talk about is just closing, what that looks like. So usually you have a set date, it's 30 days of due diligence, 30 days of closing. So it's 60 days after you sign the purchase and sale agreement, whatever that might fall upon. What does closing look like? So usually, all the time, you'll have the management be on site for the last couple days. The property will go dark, meaning they will change over the softwares or banks, whatever it may be. They're changing over management in that time frame. So if you do it on the first of the month, that can be tricky because that's when rent is due. So a lot of, usually the website is down, whatever it may be. Usually people, how they pay normally, it's down. So that can get kind of complicated. The prorations will get kind of complicated. But typically, what would be nice is if you do a closing time frame in the middle of the month where not too much is happening with exchanging money from the tenants to the owners. So they'll be on site, they'll change over the softwares or the systems, let's call them. There's obviously a settlement statement showing who owes what, and where it goes. And then you're officially closed once the funds have been transferred. And that can take some time, obviously, especially if it's a larger deal. A lot of times I will not be on site, or our team will not be on site for that. But of course, our new management will be, because they'll be, managing the property effective of the funds transferring over. And basically everything's complete. A lot of times you'll have a true up or prorations, or true up of the prorations, which happens after the fact, which is a whole nother ball game, but we can get into that another time. But it should be pretty smooth transaction from previous management to new management. Most of the time they've been through something like this in the past on larger properties. So it's usually pretty simple. All right, I don't see any questions coming in, so I think I'm going to end there, unless anyone types anything in the next 30 seconds. I would like to mention, we do this Multifamily Investor Nation live every Tuesday. Next week we have, it was actually just put in the webinar chat. I believe it's Kelly Garrett. She'll be talking about hard money lending. Definitely a new topic to probably most. It's new to me. I find it fascinating. I love watching her videos on LinkedIn. She's a very smart woman. I would highly recommend signing up for that. And it is in the chat box, so it's right here. How to become a private lender in between multifamily deals. All right, I am going to end it there. Thank you very much. Have a great day, everyone.